Hey, what's up? I'm Adam Balsinger coming to you again with another episode of the Investor Boardroom. Today, we're going to be talking about using retirement funds to invest passively in real estate syndications. Now, before we get into today's subject, the meat and potatoes, if you will, do us a solid here. Go ahead and like this video. If you got anything out of it, hit that like button for us. Share this video with anybody that you think may benefit. And if you did get value, I would highly encourage you go ahead and smash that subscribe button, subscribe to the channel. That way, the next time that we put something out, you won't have to worry about missing it. Our goal here is to make you a better investor, a better real estate investor, and to help you get one step closer to the ultimate goal of financial freedom. So, using retirement funds to invest in our deals. This is a question that we get all of the time. So, one of the really cool things about multifamily syndication is that we are able to work with a variety of people and pool funds from a large group of people that allows us to go out and buy large multi-million-dollar apartment complexes. These are stabler investments, and if we were going out and buying single family or duplexes or triplexes, but because the dollar amount is so large, prior to syndications, it was nearly impossible for everyday people like me and the bulk of our investors to participate in these kinds of investments. We have to have a minimum investment, right? We're raising anywhere from $2, $3, $10, $15 million at a time to be able to go and buy these apartment complexes. So we can't just have people coming in with $1,000, right? Otherwise, we would have a million investors in a deal and it would just be a disaster. So generally speaking, we've got a minimum investment of about 50 grand. This isn't set in stone. Every single deal is different, but that's about where our minimum investment is. And for a lot of people don't have 50 G's just laying around in a checking account waiting to invest it into something, right? If you do, awesome, good for you. We should have a conversation about how you can get some good returns on that capital. But for a lot of people, what they do is they simply use their retirement funds and they invest in our syndications or anybody's syndications that way. So most people are really familiar with a 401k plan, right? If you have a 9-to-5 job, there is an extremely high likelihood that your employer has a 401k plan that they offer to you. But most 401k plans don't have a whole ton of options. I've been an entrepreneur really since I got out of college. I've had a couple 9-to-5 jobs here and there. And I remember that going through the 401k plans, there was maybe, 5 or 6 options, different things that you could play with here and there. Generally, it's some sort of combination of a basket of stocks and a basket of bonds. And you're simply kind of playing with your allocation between stocks and bonds, and then also you're kind of playing with your risk and reward tolerance, right? There's not a whole ton of options. It's not like you're able to pick the individual stocks that you're able to invest in. And really the 401k plan is just simply a investment vehicle that your employer is providing to you, right? So most people just choose to go ahead and sink their cash into their 401k plan, and they kind of don't really pay attention to it too much, and then they leave, and that 401k plan becomes known as like a dormant or like a lazy 401k plan. That employer continues to manage that 401k plan for you, but since you don't work there anymore, you're no longer getting a match, you're no longer getting any of those other kind of benefits that you have while you're working there, right? So it's really common for people who have moved around a couple times in their career or a handful of times in their career to have multiple 401k plans being managed by different companies, right? Well, a lot of times what you can do with those old 401k plans, people will roll those old plans into their current plan, or you could take that old 401k plan and you could roll it into something that is known as an individual retirement account or an IRA. Now, you can use an IRA even when you're still working with your employer in some instances. Some employers don't want you investing in IRAs while you're working there. It all depends. You may have to talk to HR or whatever and figure that out. But there are individual retirement accounts that allow you to determine where you're going to be investing your money. Specifically, a lot of our investors that are using retirement funds, they have something that is known as a self-directed individual retirement account. You can have these set up as Roth, SD IRAs, they're known as, or you can just have it set up as a regular SD IRA. And then so what you do, you have an independent company that serves as your custodian for your funds, and they simply allocate and invest your capital for you based on the way that you tell them to. There's also something known as a checkbook, self-directed IRA, where you manage the cash yourself. It's a little bit different. But there are plans out there are options out there that allow you to take your retirement capital and invest it the way that you see fit, whether that is in commodities, whether that's in precious metals, whether that's stocks, bonds, mutual funds, and ETFs, whether that's real estate, you name it, you have one of these self-directed individual retirement accounts, you can determine where your cash is going. My wife is a clinical pharmacist. She actually just switched jobs a couple months ago. We took her old her old 401k from her previous employer. We rolled that over into an IRA, and then she took that retirement money and invested it into real estate. So anybody out there can do this. If you have any questions on this, please don't hesitate. Go ahead, feel free to reach out to me. If you'd like me to connect you with, we've got relationships with a couple IRA custodians. If you'd like an introduction, please don't hesitate to go ahead and reach out to me. I'm here to help. As always, our goal is to help you get one step closer to financial freedom. I hope that you gained a lot out of today's episode. Hit that like button. Don't forget to subscribe, and we'll see you next time.